Hello and welcome to Pulsecast, the podcast exploring the key trends in media technology. Today we will talk about AI investment landscape with Damon Neale, who is CEO of Metadat-AI. Thanks, Damon, for being with us today again.
Thanks for having me.
So this is one of the episodes we do on AI with Damon. The previous ones were on the legal issues of AI, for those of you who are interested in the topic. And we're now focusing on the economic aspects of AI, starting from the investment landscape. So Damon, can you tell us about how the AI investment landscape looks like right now, and what are the main trends you're seeing at the moment?
Of course, no, thank you. Yes, so it's a really interesting topic, this one, because we're seeing absolutely insane numbers. Often when there's a new technology coming out, you think like the whole dot-com era, there was so much money pumped into those kind of businesses at the time, and now it really is on AI companies, and it's coming from multiple angles. It seems as though governments and private companies are agreeing with each other, because you've got, for example, the EU alone just investing 200 billion euros into AI, and even 20 billion towards their kind of gigafactories, as they're calling them. While you also have private companies like Thomson Reuters who are putting in 100 million a year, and then there's not so much money going into OpenAI, another 40 billion of investment, it's valuing them at 300 billion. The amount of money going into AI right now is arguably increasing, not slowing down. So there's still a lot of belief that AI is the way forward.
Thanks, Damon. And the first question is, what is driving this? What are the factors driving these enormous valuations? Is there an element of fear of missing out, of FOMO driving it? Both for companies and governments, or what are the variables that are behind these valuations from your perspective?
Of course, yes. So fear of missing out is definitely one. I feel every single company now has to have some sort of AI story, whether that be a startup. You almost can't have a startup today without some element of AI. I was actually speaking to a startup yesterday about how they can include AI in their business pitch, even though it was not necessarily an AI company. As well as, obviously lots of AI startups themselves, but there's existing vendors who are trying to add things on and get investment to grow and trying to prove that synergy is going to increase their valuation. But I think there's also a lot of kind of standard metrics for kind of calculating kind of valuations. So, for example, like with a normal company, you might look at revenue or EBITDA and do a multiplier on that. You'd look at their kind of growth potential and market position. And I think the market position there is one of the reasons why so much money is going in, because they're recognizing that, for example, if OpenAI absolutely dominate everywhere, which they kind of are, then and very cheaply as well, then they can kind of do an Uber on it and ramp the prices up later. But really important to be the leader in the market. But there's also things like what technology do they have. So if there's like proprietary AI models, there's a lot of foundational models who are being valued really, really highly. There's one I've got my head got $76 million dollars investment for growing a foundational model, and that's because they believe just the model itself, let alone revenues, is going to be really valuable. There's a lot of companies as well, just actually data assets. So some of them you might think like Getty Images, for example, these kind of media libraries, or other big kind of media companies, especially in like the media and entertainment industry that we often focus on. There's now a lot of value in that for model training. So if you're an AI company that has access or licenses or a lot of that data, or maybe you're not an AI company, you just have a lot of this very valuable training data, that again is going to drive your valuation up. But yeah, typically it's the same kind of method. So if that's a multiplier on that, they might take a multiplier of your revenue and then go, okay, you've got some proprietary tech, so let's add a bit more on for that. You've got the data, let's add a bit more on for that. And then just standard, can go into more detail on this, but just to be brief, SaaS often has like quite large multiples of some people say kind of 4 to 10x, but we're actually seeing kind of at the moment, depending on turnover, anything from kind of 8 to maybe about 12. But if you then add AI on that, if it's synergistic with what the SaaS company is doing, and also if it kind of gets into M&A, you're seeing like 25 times multipliers. It really just depends. But yeah, they're the kind of factors.
Thanks, Damon. And we talked about the legal issues of AI in some of the previous podcasts. Are these factors part of the evaluation at the moment, or are they being completely disregarded by investors?
Yeah, it's a great question. I don't know, to be fully honest, but I have been speaking with a few VC firms, and it very much sounds like it's being completely ignored, which I think is a little bit short-sighted, because there's the kind of normal due diligence analysis that they'll do to validate before they buy a company, but I don't think they're actually looking at the external factors as much, with regards to kind of the newer AI laws. Still very much with older stuff, making sure there's no kind of like fraud and bribery and all that kind of standard stuff. But actually, when it comes to looking at some of the new requirements coming out, there's some massive risks that could kill companies overnight. So, for example, in February of this year, the EU AI Act took effect in terms of banning all prohibited systems, like what they call kind of prohibited systems. So things like, manipulating people and social scoring. So if your business does that, which maybe you're doing it in a legitimate way, but this kind of now is making it a very risky area if the methods you're using do fall in line with this act, and actually your software is kind of dead completely overnight. I'm still waiting for some more laws to come out with regards to or more kind of case law and thoughts with regards to copyright, because that has a risk that if you effectively ripped off other people's copyright to train your model, with some of the things coming into effect in the coming years from these acts, is it going to kill those businesses? But also there are requirements to provide visibility of how you're training your models as well in some states in the US and various acts. So for that, it might even mean that like some stuff that you were trying to pass off as proprietary, if you just drop the value in your company, and it might even be that it's secret IP, like confidential IP, is now in the public domain. So is that going to weaken your position? So I do think they're going to need to consider the impacts of some of these acts and how that might affect these companies and what they're doing, because it might completely wipe out the company, or it might even drop the value. Could also be that if they're not compliant with the EU AI Act, there's up to, I think, 35 million euros in fines, or like 7% of the whole like global turnover of the company that could be a fine. So if you were to buy a company, then discover it wasn't compliant and then received a 7% fine, that might like completely trash the investment or acquisition you've made. So yeah, there are a lot of regulatory factors to consider.
Thanks, Damon. You talked about, you mentioned visibility, and I thought about something still when it comes to tech valuations in AI. So it seems to me that when it comes to visibility, there could be a tension here because, of course, regulators and for compliance reason, you might want to make some of your model or technology visible in order for it to be compliant. And if I were an investor, I would be interested in knowing how the technology you're using works to before investing my money. But at the same time, I'm seeing I'm seeing a little bit of secrecy, because AI is a competitive advantage for some companies. Even when we go to trade shows, sometimes people talk about AI, but they don't want to fully show the intricacy of their technologies and their models. So from your experience, is this a thing, and our company is managing this tension between visibility and keeping the competitive advantage?
Yeah, it's a great thought, because this has actually gone across not even just limited to AI, but I feel like it's almost strengthened with AI. One aspect is some companies fear that they have trained on data they shouldn't have. And they don't have licenses for what they're doing. They're just growing quickly. That whole kind of Don't follow the regulation kind of thing, or don't worry about that kind of coming. Just innovate and grow, and worry about it later, which I think we've seen a lot in the US and companies like OpenAI, and hence all the lawsuits and stuff now. But I think there's also a fear that because a lot of the landscape revolves around open source, either data or models or just kind of underlying engines, like things like TensorFlow, most companies aren't building their own from the ground up. They might be building on top of that. And I think once you start building on top of that, there is a fear as well that the acquirers or investors go, well, hang on, if you're just grabbing this thing that's free and you're adding on top of it, why don't I just do that? And instead of spending $100 million on you, why don't I just spend a few million and do it for myself? And the reality is we've been doing this for years. Like my own technology has hundreds of open source bits of software in it. Just because even if you want to make a table in software, there's no point in doing all of that hard coding. You can save yourself days or weeks of time just by using the many great open source technologies out there. And you look at any kind of list of licenses on even Trello, there's hundreds of open source licenses just for an app that you think that's quite simple, but their valuation is huge, and they were bought by Atlassian. And even in our industry, things like transcoding, a lot of the professional transcoders are built on top of FFmpeg, and there are other libraries as well. But I think there's a fear that if you were to start showing and having to show that you are using open source data and technology, that they would somehow devalue what you're doing. Yeah. As well as I've had other companies saying, oh yeah, our models are multimodal because that's a popular kind of trend word at the moment. And they're really not. They're actually they're very narrow intelligence engines that they've put together. So they might have an engine that does transcription and an engine that does scene description. And they're putting those together in the output and then saying that's multimodal. And it's not true. It's not quite true. I guess there's also like the marketing side of it versus reality. But I think if you all of a sudden had to start being like, not so much my company, but I have seen in some of these marketing things, if they had to start being super honest or putting out stuff that doesn't exactly comply with what they're putting out from their marketing message, it might impact valuations, impact trust and client opinion.
Thanks, Damon. That's very interesting for me, I think. And you talked about SaaS as well before when we were talking about valuation as one of the most valued business models. Can you perhaps expand on that and talk us a little bit about what are the business models, the different elements of the business models in AI that are being valued the most?
Yeah, it's often one of the reasons why SaaS is so popular for investors is that you've got a kind of not quite guaranteed, but a reasonably trustworthy income source that's ongoing. So previously, if you think about it, like software was sold, and it's not just like if you think of like Adobe, it used to be sold as like a perpetual license, and you might pay $1,000, or it might be like $50 for like an app or something, and you owned it for a lifetime. But that company still had to be advertising and selling that software continuously just to get like $50 each time. And it might have still had, companies worth hundreds of millions and billions, but if your software is no longer popular, or you can't release that next new exciting feature that means that people upgrade, which I feel like companies like Adobe were having difficulty with, having to constantly output these amazing features, which they were doing, but just to get people to upgrade. At any point, people just stop buying, and that's your company kind of dead. There's no more revenue. Whereas shifting over to the software as a service model now means you've got, it might be a lower amount, but over time it's consistent. So it aligns with hiring, because you've got to pay someone to work for a year, even if the software is only bought once in the year. So SaaS, at least if it's a monthly income, you can then map your kind of cash flow to all of that. So it is just a much more popular business model for business owners, and then also investors and acquirers, because then they know that if they go and put some extra money into it to increase sales, like moving it to other industries or other territories, they can now get a multiplier and have this guaranteed income or more reliable income longer term. So it's always attracted, or since really SaaS started, a much higher kind of multiplier. And the multipliers have actually shifted from like maybe discounted cash flow and some other methods to more multiply it on revenue or EBITDA, which we could talk about. But effectively, that has meant that those businesses, compared to like a consultancy, perhaps, where you could kind of buy it, they're one-off revenues, but then everyone quits. SaaS is seen as being more valuable, and then as soon as you add AI into it, it doesn't kind of add together like an AI company. Let's say, just pick two simple numbers. Let's say it's a 5x multiplier on a SaaS company. It's a 5x multiplier on AI. It doesn't mean all of a sudden it's 10x if it's an AI SaaS company. But if there are synergies between those technologies that enhance it further, and again, if you have the other factors we've discussed about data and proprietary technology, and also a skilled team, things like that, that can add up. And then if you're OpenAI, I think when we're looking at DeepSeek and Llama and these kind of LLMs that have been given away for free as open source models versus what they're valuing as $300 billion business, that the market share as well. So I think they're going for the more B2C SaaS, where for $20 a month you can have access to these incredible models, and just getting it into absolutely everything. And that's where it's going beyond the SaaS multiples and the multipliers and beyond the AI multipliers because of the market share. So yes, again, there's lots of factors, and SaaS is pretty much common across the board for AI.
Thanks, Damon. And we've seen this in our industry in the last few years as well. The fact that subscriptions attract higher valuations. So there are specific things to AI, but that hasn't changed a lot, I think. And when it comes to the hottest areas of in terms of AI investment at the moment, what do you think are the hottest areas at the moment that are attracting the most investment? Although I know this might change tomorrow as the market is moving very quickly.
It definitely is a great comment, actually. The market is moving so quickly. There really are some dynamic shifts. If we think about before, not that ChatGPT was the first, but before that came out, the amount of marketing and the hype on it, it was more kind of artificial narrow intelligence models that were the thing. And then once that came out, it was all on LLMs, and arguably the kind of tech trend of the moment of the type of model might be multimodal, although ChatGPT have been pushing like kind of high level reasoning, and there's so all of those kind of things, it really will shift. There might be something new that comes out. Multimodal might shift a bit more towards general intelligence, not entirely yet, probably not for many years, but the next thing will come out and it will probably then shift the focus. But I think one thing that is also kind of interesting in terms of hot and also a little bit not, is the infrastructure required. So Nvidia, for example, I think in 2024, their market cap went up by $2 trillion just based on the amount of demand for AI chips. And then, but then we've had DeepSeek come out and wipe like 17% off that value pretty much overnight, because they're saying you don't need those chips. You can actually train these models much more efficiently. And I've been able to as well. I've been able to train to some extent on CPU or on very low cost GPUs. I've not had billions of investment, and I'm still managing to keep up and be on par at least with accuracy. So that one's like a hot one that's then overnight kind of a bit cold, and then I think now by now they've recovered about 90% of that lost value. So that suggests it is still hot, but that was just the kind of marketing blip almost. Like there was the trend shifted temporarily as people got scared and quickly sold all of their shares. But yeah, I think it is a really tough one. It is so dynamic, but I'd say infrastructure is still currently quite hot, and LLMs and multimodal are very much kind of trending, but subject to that trend changing.
Thanks, Damon. So yeah, it's not just the features, but it's also the infrastructure behind it, which we need to remember about. And our investors keeping up with it, because from your perspective and from what you know, because I think things changing so quickly and so rapidly. We've seen it, of course, with the announcement of DeepSeek, but if I were an investor, I would be a little bit worried because the money I invest could become pointless the day after I invested it.
Yeah, I'm not sure how they're keeping up with it. I think to some extent is it just AI? Also, is there market traction as well? If your company's already demonstrated success in the market, then I think that's quite a good thing to give confidence. That said, though, the 76 million the investment that I mentioned before, for that one, I think that was pre any customers. It just, this is a really cool model. So I think there's a lot of faith and a lot of belief. And again, it depends on the type of model. So if it's a company focusing on what's called like a foundation model, then I think it's just purely on the team and the tech seeming really cool and really proprietary and probably examples of it being effective, but not really considering, is that going to be relevant so much? Obviously there will be a consideration for that, but is it going to be relevant in 10 minutes time when the trend shifts? And what's to say that OpenAI don't just bring out another model that's just as accurate and still only $20 a month? I think they're just putting a bit of faith on, it's a great, in that case, it's a great team, it's great tech, and we can see applications for it, and just having to trust that as that money helps to develop it and advance it, that then they can get market share later. And I think it may also be why they're putting so much money in, because to some extent, if you put in 100,000, that could get spent very quickly. And is it really going to help that company to grow and thrive and survive? Versus if you actually then put in 100 million, we're kind of seeing like even early stage AI startup, I think the median is around $70 million valuation, which is really high. But if you went and put $100 million in, not only can you help them grow the technology really quickly, but then you can actually protect them in their market share and market dominance, because now they can hire a massive sales team, do loads of marketing. So you're kind of protecting your investment a little bit by putting so much into it. But I do think that, to be fair, they probably are doing a lot of research on what is trending. So I'd imagine, like from what I've seen, a lot of multimodal models, or at least companies marketing that they're multimodal, are getting a lot of investment. LLMs I've not seen, but that's probably just because I'm less involved in that. But I would have imagined that at least a year ago, that would have been a big focus for them to invest in. And then, all the investors are clearly betting on the likes of OpenAI being worth so much, with I think SoftBank's leading the $40 billion dollar investment round, and just in training still really being a big thing, with so many governments. What the UK government mentioned, the 200 billion from the EU investing in hardware. India's got a program. So many different countries are investing in building the data centers for training. And again, if Nvidia's stock can gain 2 trillion in not very long, and then bounce back after the DeepSeek announcement so quickly, it's still really clearly that almost like the bricks and mortar of it, the infrastructure, is almost going to kind of continue to trend, because it's a requirement, or at least currently believed to be a requirement in order to train these models. But yeah, it is really volatile, and I think there's some of the factors that investors are thinking about.
Thanks, Damon. And finally, I want to ask you, what advice would you give to an AI startup that is looking for funding? Yeah,
I think I guess if you focus on some of these trends at the moment, so if you're looking at building a foundation model, maybe focusing on multimodal or LLM, and something that's kind of attracting investment at the time. Although it is becoming a very busy space, so you'll have some competition. Some advice as well that I've been given, and I have given as well, is it's often called a maximum precision product, or MPP. It's where you focus on solving a very niche or specific problem and doing a really good job at it. Because then, let's say there are lots of LLMs out there, but perhaps Thomson Reuters with their Westlaw product is the best. I'm not saying it's the best, but if it turns out to be the best at kind of legal, providing legal advice, because they have their database, a vast database of legal knowledge that they offer on a license basis to lawyers, then fine, there might be many LLMs out there, but if theirs is the best at that very specific thing that is really specialist and really high value, then that's going to like, are they really ever going to be competing with OpenAI, and is OpenAI ever going to be competing with them and DeepSeek and all this stuff? Probably not, because it's a very specific solution. And while they might also offer advice, you're going to go for the leading platform for something so risky. I think also, if you can demonstrate at least an understanding of the regulations, I think early stage startups might not be able to demonstrate compliance, but the awareness of it and you know, having like things like ethics and that front and foremost in mind is important, because a lot of funds will only invest in kind of ethical products and that, and you might get checked if you're, you know, being sustainable, being ethical in how you're running it. And then yes, with this landscape changing and investors becoming more aware of the legal requirements for it, I think just demonstrating that will give them the confidence that their money isn't just going to disappear when you get a fine from the EU or something, or your models kind of die overnight. And then otherwise, I think, and this is true of all companies, really show market traction. If you can prove that you can get some customers, you can get some revenue, it actually shows that the thing that you're building works and that people are willing to spend money on it. And then the investment could, you know, help you to expand that to get more customers and, you know, raise the rate of that growth and expand into new markets and things like that. But if you're super early stage though, it's often based on the team. So if you have some really skilled kind of experts in AI or industry expert, that can really help with early stage of your pre-product, because then they'll have the confidence that you have the capability of doing it. But still, often best to have at least a proof of concept, if you can pull one together to show that not only do you have the team capable of delivering, but you can actually validate that you can deliver. Because here's a little example of it, especially when people are giving, you know, millions, not hundreds of thousands, and actually tens of millions. When you're asking for that level, there's quite high expectations of what you need to prove often.
Thanks, Damon. And it seems that even in this case, when you're proving your case to investors, you need to be multidisciplinary. We talked about this before, so you can't just say, you know, I've got the best technology, or I've got, you know, the best business models for this industry, but you have to, you know, check a lot of boxes, which I guess applies not to just AI, but I think it's worth reminding our listeners about it.